Join us now, Komal Sri-Kumar, president of Sri-Kumar Global Strategies. He joins us now. I know, Sri, that you saw the news coming out of the UK. So I have a question. Should we say, great, the UK, they blinked. Maybe we'll blink here, and there might be a relief here with the Fed. Or should we say, oh, no, they blinked. Maybe we'll blink here. I can make either case, Sri.
Yeah, Joe, they are very timely questions. The Bank of England blinked because it had an uncooperative Chancellor of the Exchequer who was essentially undoing the Bank of England's moves to cut back on inflation. Here in the United States, you do not have that conflict between the U.S. Treasury and the Federal Reserve yet. But here is a major point that comes out of today, Joe. You and I have been talking for the last 4 or 5 years, and I've been saying since the January 5th Georgia Senate elections that the bond yields are headed up. And since I said that, we have quadrupled in terms of the 10-year yield. I'm going to say for the first time on your program that we have just about topped out. 4%, a little bit more, a little bit less. This is where we are going to be. So in a sense, there is less need for the Federal Reserve to blink. But what I'm watching is what is happening also with the dollar, and the pound sterling story is only one part of it. Look at what happened today. The UK gilt yields came down because the central bank switched over from quantitative tightening to quantitative easing. But the pound sterling weakened. In other words, bond prices and the currency moved in opposite directions. That is a warning signal. I believe the currency market, and I think if there is going to be further trouble in the UK markets, it's going to be good for the 10-year yield. It's going to come down further. So that's why I'm saying we are just about topped out now. It's a big change in my expectation.
If part of the angst that stocks were feeling was the strength of the dollar and worried about continued strength, it was definitely a bad move that we saw, because the dollar sort of could tell that the UK and Europe didn't have the same resolve that the Federal Reserve has. And so I don't know whether that's a good move, that if central bankers aren't synchronized in terms of realize if we really want to put a stake in the heart of inflation, they need to get on the same page, and they're obviously not on the same page.
They are not on the same page. They are not able to be synchronized because political interests are very different between the United States and the UK. US, we are headed toward midterm elections, but we don't have presidential elections for another 2 years. In the UK, we have a new conservative government, which wants to prove that it is different from previous governments. But on the other hand, you cannot just turn economic theory on its head, which is what the British Treasury tried to do, and I think they are paying the consequences. Now, if they double down and they have more tax cuts, if there is more bad policy emanating out of London, the 10-year yield in the US is going to go down further. So we are intimately linked at the hip with developments elsewhere in Europe, Joe.
Shepard Smith here. Thanks for watching CNBC on YouTube.